If you think $1,000 isn't enough to start investing, then you need to think again. By the end of this video, you will know exactly where to put your first $1,000 in 2026 to start building real wealth. This beginner blueprint is designed to be friendly, safe, and actually effective. There are no scams here and no unnecessary fluff. We are focusing on proven strategies that work in the current economic landscape. This is about taking that first step toward financial freedom with a plan that is built for the long term. I remember the day I decided to invest my first $1,000. I was nervous, I made a few rookie mistakes, and I spent way too much time overthinking every single move. But by learning and applying these specific strategies, I managed to turn that initial spark into a real functioning portfolio. It changed my entire perspective on money. In this video, I'm going to break down the 5 best ways to invest $1,000 in 2026 step by step, so you know exactly what to do from the moment you open your banking app. Stick around until the very end, because I will reveal a secret strategy that most beginners completely overlook, which can significantly accelerate your growth. Before we talk about where to put your money, we have to address the mindset you need to succeed. Investing is not a get-rich-quick scheme. It is a marathon, not a sprint. The most important thing you can do before putting a single cent into the market is ensuring you have a solid foundation. You must have emergency savings first. Investing without a financial buffer is incredibly risky because if an unexpected expense pops up, you might be forced to sell your investments at a loss just to cover your bills. Think of your emergency fund as your shield and your investments as your sword. You need both to win the battle for financial freedom. Understanding risk versus reward is also vital when dealing with smaller amounts like $1,000. You should focus on sustainable growth rather than chasing instant gains. Even $1,000 invested smartly today can grow into $10,000 or much more over time thanks to the power of consistency and compounding. You are planting a seed today so that you can sit in the shade of a massive tree years from now. Do not let the small starting amount discourage you. Every billionaire started with their first dollar, and your journey starts right here with this $1,000 blueprint. Our first major investment option for 2026 is stocks and exchange-traded funds, commonly known as ETFs. For a beginner, ETFs are generally much safer than picking individual stocks. When you buy an individual stock, you're betting on one company. If that company fails, your money vanishes. However, when you buy an ETF, you are buying a tiny piece of the entire market or a specific sector. It is instant diversification. For your first $1,000, a great move is to put $500 into a diversified index fund that tracks the top 500 companies. This gives you exposure to the biggest players in the economy with much less stress. In 2026, there are more beginner-friendly apps and brokers than ever before. These platforms allow you to buy fractional shares, meaning you don't need thousands of dollars to own a piece of high-priced tech companies. Think of ETFs as buying a basket of goods instead of just one apple. If one apple in the basket is bad, you still have a dozen others that are perfectly fine. This strategy offers more growth potential over the long haul while shielding you from the extreme volatility of the single stock roller coaster. It is the cornerstone of any solid beginner blueprint. Next, we need to talk about a higher risk, higher reward option, which is cryptocurrency. While the crypto market has matured significantly by 2026, it remains more volatile than the traditional stock market. Because of this, I recommend only allocating a small portion of your $1,000, perhaps $100 to $200 into this space. The goal here is exposure, not gambling. You want to avoid the hype coins that dominate social media and instead focus on reputable, established digital assets that have shown long-term utility and institutional adoption. The key to crypto is research. Do not buy something just because a headline told you to. Look for projects that solve real-world problems or provide infrastructure for the digital economy. Using reputable, beginner-friendly platforms is essential for security. By keeping your crypto allocation small, you allow yourself the chance to participate in massive upside potential without risking your entire $1,000 nest egg. It is about balancing your portfolio so that you can sleep at night while still keeping a foot in the door of the future of finance. For those who are more conservative or want to ensure their money is 100% safe, the fourth section of our blueprint focuses on high-yield savings accounts and cash alternatives. In 2026, interest rates have stabilized in a way that makes these accounts very attractive for parking cash. Online high-yield savings accounts or short-term certificates of deposit or CDs offer a way to earn a guaranteed return on your money. The pros are obvious. There is virtually no risk, your money is easily accessible, and the interest interest compounds monthly or even daily. The downside is that the growth is slower compared to the stock market or crypto. However, this is a fantastic place to put a portion of your $1,000 if you think you might need the money within the next year or two. It is also an excellent spot for your emergency fund. Seeing your balance go up every single month without any fear of a market crash provides a level of psychological comfort that is priceless for many new investors. It is a safe harbor in a fast-moving financial world. Now, let's look at a creative way to invest that many people ignore: micro leverage and side hustle funds. Sometimes the best return on investment doesn't come from the stock market, it comes from you. You can use a portion of your $1,000 to invest in skills or tools that generate immediate returns. For example, spending $200 on a specialized online course or a piece of software for a freelance side hustle can yield a much higher ROI than any dividend check. If that $200 investment helps you earn an extra $50 a month, you have achieved a 25% monthly return. Investing in your earnings has this power. The skills you learn in digital marketing, graphic design, or a technical job are lifelong. Adaptability and high-income talents are insurance in 2026. This is like reinvesting in the money-making engine. Combining traditional investment with skill building creates a dynamic loop where your increasing income allows you to invest more each month. Robotic investment is our sixth choice. The algorithms on these sites automatically diversify and reinvest dividends based on your risk tolerance. This set it and forget it method is ideal for novices who don't want to spend hours on charts. You simply deposit $1,000, answer a few questions about your aspirations, and the software does the rest. It will balance your stocks, bonds, and other assets to keep you on track. The low costs and maintenance of robo-advisors are enticing. They eliminate emotion from investing, where amateurs fail. After $1,000, automate a $50 monthly commitment to use dollar cost averaging. This means you buy more when prices are low and less when high. This leads to steady portfolio growth, a new solution for busy people seeking reliable wealth creation. As promised, here's the hidden strategy most novices miss. This is the employer match hack. If your employer matches your retirement contributions, that's free money. If your employer doubles your $1,000 deposit, you've doubled your money before it hits the market. Most people see their $1,000 as a distinct thing, but using employer contributions is the easiest way to make $2,000. It guarantees a 100% return that you cannot obtain anywhere. Most beginners think they need to do everything themselves, yet using all your tools is wise. This match and the compound interest hacks we've discussed create an unstoppable financial force. It can build hundreds or thousands of dollars to your net worth over several years without any effort. Building riches in 2026 is won this way. If you choose the correct stocks, ETFs, crypto, safe accounts, and skill building, $1,000 is enough to start. You have a complete beginner's guide for the year. Starting is extremely crucial. Don't allow analysis paralysis limit your ability. Which of these 5 tactics will you attempt first? Will you play it safe with ETFs or learn with a side hustle fund? Please tell me below. I read every response. If you found this helpful, like the video, subscribe to the channel, and hit the notification bell to never miss another investment tip. Start your financial freedom quest with $1,000. Let 2026 be your wealth building year.